I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Don Spafford. Don is a partner with Beyonder Holdings, an outdoor hospitality investment company that specializes in RV Resorts and Marinas. And Don, as I said, I'm going to stop there on your bio because I want you to tell us your story. But first, please, I just want to say thank you. Thank you for coming on the show today. Thank you for taking out the time and coming to share your story.
Thanks, Jason. It's my pleasure. I enjoy talking about it. I know it's a more unique niche of real estate investing,
Yeah.
and that's I think exactly why people should hear about it, because it's something that you don't hear from 1,000 other people that are around you or see on social media. So it's just good to know what else is out there and have some options to consider when you're looking for something to invest in.
Yeah, absolutely. Well, why don't you tell us your background, kind of tell us, as much as you'd like about, your life leading up to real estate, and then we'll talk about
Yeah,
your real estate journey. Kind of I'm really interested to hear this.
sure. Yeah, thanks. To kind of fast forward for most of my life, I guess I grew up around Omaha, Nebraska. That's where I went to school. Went to the University of Nebraska at Omaha, so basically right next door to Warren Buffett. Kind of grew up in his shadow, and so I always ever since a young age, I've had an interest in investing. I knew I wanted to have money work for me, so that was eventually my plan was to get more into that, not just invest in things, but actually to know about it and work in it. So I got degrees in finance, banking, investment science, portfolio management, and accounting. So I wanted to be able to. At that time, my goal was to become a financial advisor, wealth manager, somebody working with investments. And Just due to I guess life circumstances and things, whatever. But I ended up going to school part-time over many years as I was raising a family. And by the time I finally finished, was in the spring of 2008. Of course, as we all know, by the fall of 2008, that's when the markets and the economies all collapsed, and all these jobs I was aiming to get to were all going out of business and laying people off. So
Right.
there was kind of like no really hope there. Luckily for me, I was already at least in a job where I worked in that industry, so I at least had some security. I was safe. Wasn't my dream job, and it definitely wasn't high paying job, but at least it was a job at the time. So I felt at least I can take care of my family at the minimum. So as time went on, I saw all these things happening, of course, around me, with, as we all know, especially in real estate, all these home prices coming down, and just
Mhm.
$340,000 homes are now selling for 70,000. I was like, man, there's a huge opportunity here, but I don't know anything about real estate. I don't know how to take advantage of this. I knew nothing about renting. I was, I guess, at the time I was envisioning it in my mind more like stocks. I'm like, I'm going to buy it and hold it for a while and then sell it. I didn't even think about renting. I was like, I was like, how am I going to buy a property and hold it for a few years just to hope to resell it? Like, I can't afford to pay for mortgages. So,
Right.
so I didn't even think about, oh, somebody's going to pay it, rent it and pay for it. But anyway, so as time went on, a few years later, my wife actually became a realtor herself. As our youngest children were getting to school, she was, looking for something to do. We wanted to have her have a flexible, work job where she could be available when the kids need it. And so she got into real estate, became a realtor, and from the very beginning started working with investors as her very first clients. And that's kind of where my mind started to work again and think, okay, there's got to be something here I'm not understanding. I got to figure this out. So I started researching, read some books, and got at least enough or comfortable enough to at least take the risk and say, let's give it a try and go for it. We could still buy a great property at a foreclosure sale at the time. And but right about that time is also when we decided actually we needed to move from Omaha to move to Idaho, where I'm at now. And so I decided to hold off on that. I didn't want to get into something and then have this long distance property with no idea how to manage it. So that got put on hold. We moved to Idaho in 2015, and about a year later, I got back into it once we got kind of settled to our house here. Kind of got the feel of things. I was still working for that same company, now working from home, working remotely, and but I knew that no matter what, I needed to have something change. I I kind of felt stuck in my job because I've been there now long enough that my skill set was pretty much only useful for that job in that company. And I didn't want to go back to school and get more degrees and education. So I'm like, you know what, there's little hope for a change here without getting, a second job or whatever. So I understood enough now by that real estate was what I saw was the key, right? That was the saving thing that could get me the future and the things I wanted to provide for my family through passive income and through wealth building through real estate. So I was willing to take that risk and take that leap of faith and make something happen. And so we bought a property here. Was the first one we bought was a fourplex. I took a loan for my 401k because I didn't have enough money in savings to just come up with a big down payment. And I also used a local lender that has a 10% down payment option for an investment property. So I didn't have to come up with 25% down. I just did 10%, and I took most of that from my 401k. And that's what I had to do to make it happen and make it work. It was definitely scary and maybe a big risk even, but I figured what else I have to do. My alternative is file for bankruptcy or get a second or third job. So it's like I've got to make this work. So I had to hustle and make sure it didn't fail. And so that's kind of what I did just to get that going. And as time went on, and I looked into different things to continually adding more passive income and building more wealth. I eventually led me to where I'm at today with, like you said, with these RV campgrounds as a very high cash flowing asset for passive investors. And that's literally what drew me to it above anything else. Is I was looking for other multifamily and things to do. The cash flows were not good enough for me to put money into, and to get to my goal of getting out of my job.
Yeah. So, what I'm kind of curious, like, you're one of the few people that even talk about, sort of RV and marina type investing. How did you find out? Because if that was 5 years ago, 6 years, like,
Yeah.
how did you find out about it? How did you come across this and I'm sure then it was even better. Like, I'm sure the returns were even better. Now some people probably know about it, but how did you kind of get started there?
Yeah. So actually, I only discovered campgrounds about 2 years ago. At this point, I started investing, 5.5, almost 6 years ago now at this point, but I didn't get into the campgrounds until about 2 years ago, and that was honestly through a podcast. As I would do my job, again for that finance company I worked for, I would sit here and all day long listen to podcasts, as I worked. And I usually put them on like 1/2 to 2x speed, depending on who's talking. If I get a fast talker like me, I have to slow it down to 1.5 or less. But a regular person that I can put a 2x and understand them fine. So I would listen to, probably 4 to 5 podcasts per day as I worked. And it just happened one day that there was somebody talking about RV campgrounds. Actually, more specifically, it was the RV parks, which is a slightly different model, which I can get at that in here. But either way, the point was there was multiple income streams and higher overall cash flows on these types of properties. And so that kind of caught my attention for one, for the great cash flows, but also the aspect of just kind of, I guess, sort of like a light bulb moment. I was like, wow, wait a second. I live where I live here in Idaho. I'm like an hour and a half away from Yellowstone Park. Just about every house here has an RV pad on the the driveway, and most people have a camper or RV of some sort. So I'm like, there's a huge potential opportunity here for people that otherwise would not invest in real estate, but probably would invest in a campground because they obviously enjoy it and they go to these places. So that's kind of where I had this moment that there's very good possibility here of getting something that I may not otherwise achieve with traditional, multifamily or other real estate. So that's really what made me want to research it more. I started going to webinars and connecting with other people that are in that space just to learn more and get educated. And initially, my goal was just to find somebody that may want to buy one in this area, and I could be their boots on the ground and just get my foot in the door and to learn the process from them. It was my initial goal, and just by doing that and networking with people that are in that space is how I eventually came across the guys who are now my partners, and kind of everything went from there.
Cool. You mentioned that they have, multiple revenue streams within, and so what are those? How do I feel like we do talk a lot about multifamily on here, and it's like sort of, you have your rent, and then you have maybe pet income. There are other things, but they're fairly standard across in general. Apartment communities, they're going to have similar additional fees, other income. How is it with your RV parks and kind of your marinas? Like, how does that break down in other asset classes?
Sure. Yeah. Well, so going what you're saying here, like with multifamily, for example, I like to use that an example because that's what most people know and understand, that they're familiar with it. So, as you said, you're gonna have your main income stream is your of course your rental income. Then you might have some additional like pet fees and then laundry, and that's maybe about it. It might be like one or two or minimal things, but for the campground deals that we're in, there's could be up to maybe 10 or more income streams. You get your standard rents, you get your nightly rentals, you get your weekly rentals and monthly rentals, depending on who's all staying there for how long. But you also then typically have many places will have like like a I don't know, like a conference center or meeting place, like a reception area. I guess people held like a wedding receptions or party events or whatever. Those buildings alone will rent out for a decent amount of money. Sometimes $200 to $1,000 a night, depending on the location and everything. But then you got people that are paying for just snacks and things that there's gonna be like a camp store that sells little things that people need, like water, drinks, and all that kind of stuff. You may have a like a small bar and grill or something there on site that will serve some small food things. We did we may have some properties that have a restaurant on site, but we don't run the restaurant. We just rent out the building. So the building itself will be additional rental income for a restaurant that's paying for the spot there. You may have, if you're like in an area that has like a lake or river or some kind of water feature like that, you could have boat rentals, or at least the docks spaces that you rent out those docks slips. There could be again like something like that with renting paddle boards, or other water use things. Aqua parks, people pay to go and jump on a big aqua park thing on the lake. You may have a big thing is golf cart rentals. People love to use the golf carts to get around the property rather than walking everywhere. That's additional income there. There's almost the great thing about this is there's almost unlimited upside potential as far as what you could create and do there. Find something that will work and make it happen. I mean, we've got some properties that we're building out like an amphitheater to have concert events, right? So people that can come there may not become there for camping, but they'll come for the concert. While they're there at the concert, they'll might as well go hang out in the lake and pay to use the paddle boards or whatever, buy some food, drinks, all that kind of stuff. So all these additional additional income sources help build over to the total NOI on the property.
Yeah, no, I wouldn't have even thought of all this. I mean, that's just it's almost whatever your imagination can sort of.
Exactly.
I suppose
Right.
I don't know. This just popped in my head, but maybe you could put like a mini golf course on them or something. I'm just thinking like you've probably got a lot of space on most of them. How do you find them? Like, how do you source these deals?
So for our team, most of our deals we go direct to the current campground owners. So we typically don't go through brokers. We have bought one so far from a broker, but most of the listed properties for us just won't work for a syndication anyway. They may be fine if you're going to be owner operator, but for a syndication model, we need much higher returns than what we are finding on typical listed properties. And so we basically just call up the campgrounds. The great thing about this niche is that most of the properties are owner operated, mom and pop, so they live there, they run it. So most likely, if you call them up to say just if you're making a reservation anyway, they're probably the ones that are answering. So it's pretty easy to get a hold of the owners and just from there, ask them if they're willing to sell. So most of them probably are not, but it takes a lot of phone calls to go through to find the ones that are. But when you do, you can typically work out a great deal. And half the time we get seller financing on them because they've probably owned them outright for maybe even through generations of their own family. And then we just go get creative from there, right? Work out some kind of way to make it work for them and for us. And if we don't get seller financing, we'll just get bank financing either way. And then of course do a syndication to help bring the equity we need for it.
Is seller financing makes sense. Is it hard to get bank financing on these? Is it just are there banks that are maybe now there are more banks that are sort of, I guess, geared or at least experienced in lending on this? What's that look like for you?
Sure. So I wouldn't say it's hard to get it. I mean, it takes some searching around. Sometimes we've got a few banks now we work with that we don't have any problem with now. But early on there was you use like a local regional bank that may already have had the note for that property in the first place, so they're familiar with it, and we can get the loan for that. But sometimes you run into situations where you have Like for example, we had a property in Missouri that we closed on last year. It's in basically the Lake of the Ozarks area. And this property has, first of all, it was on a land lease. So the Army Corps of Engineers owned the land, so we have to lease the land from them. And so some banks have a problem with that, some don't. And then on top of that, we have a hotel and a restaurant and the boat dock slips, and so all these different things added on. So some banks say, well, we like this, but not that, and vice versa. So that one, just because of the time involvement trying to track down a bank that could do all of it without any problem, we ended up going seller financing on that one just because the sellers understood the situation. They're like, yeah, well, we'll finance it. So we did that, and of course we now have other banks that we are working with. At the time, that was a local bank we were trying to do it through, but we now have other national lenders that can do all those things without any problems. So going on at this point, we don't think we'd have any problem financing any of our properties that we come across. We've got a good selection of banks to choose from that can do different things. So there are exclusive campground lenders. So yeah, it's not. I wouldn't say it's difficult, but it definitely can be a bit challenging depending on the circumstances. The one thing that is maybe a turnoff for some people looking to buy these properties is that you cannot get non-recourse loans on these as of right now, anyway. So like you can't get a Fannie Freddie type loan. And so for our team, we don't have a problem signing on a recourse loan, because we of course we fully believe in these properties, and we of course do our extensive underwriting to make sure it's a great home run deal in the first place. But there's some people that would have a problem or fear, I guess, of signing a recourse loan. So that's about the only thing that really sets it apart versus other types of real estate.
Yeah, it makes sense. I think you have, I feel like this was the story for, I don't know how many years ago, but sort of self-storage had that same, when people were starting to look at self-storage, it was as more, I guess from an institutional level or just from a syndication level, it was like very, very mom and pop ownership heavy. And it sounds like this is kind of a similar scenario. And I've spoken with, self-storage investors that, similar concept with getting the lending on those self-storage deals, at least in the beginning. And I think it just takes a little time for the lenders to come around and get comfortable. And maybe at some point there will be non-recourse loans for these campgrounds as well.
Well, there are some that are out there, but they're at a much higher cost to the point it doesn't really make sense to even go for it. It's more like things, if you really, really want it, here it is, but you got to pay a lot for it. So at first it's not worth it.
Yeah. People always talk about multifamily being, you're not buying a property, you're not buying real estate, you're buying a business. But I would say this is probably even more so like that. There's property associated with it, although it sounds like that deal in the Ozarks, you were leasing the property. So it's more of a business plan or a business model than it is just real estate ownership. There's maybe some real estate ownership component to it, but if you're going to implement all of those different income streams, you do have to really look at that, sort of from that business perspective.
Yeah, exactly.
So with that, is the underwriting harder? Or how do you kind of model these out? I'd imagine it makes it, there's a lot of different moving pieces.
Exactly. Yeah. It definitely is more complicated than I'd say your traditional, multifamily or self-storage or something. Being that there's no standard, especially again, just to give some clarification on what we are buying. We are specifically purchasing these resort destination vacation campgrounds, not where people live there year round. So you can have more like guaranteed expected income. Like, it's going to rent for this much per month, 12 months of the year. This is what you expect for income. For us, this is a much more like transient type of a property. So very similar to like a hotel model, or like I refer to it as like a short-term rental at a multifamily scale. So you don't have guaranteed people staying so many days per week, per month to count on. Here's my projected income. So we have to go really, really drill down and understand the property itself, the historical performance, the area, the needs, and I guess the growth of camping in that area, and of course what we can do to improve the property to attract more people to come there. So there's definitely going back to those multiple income streams. It's a bit more complicated because you got to make some projections on what to expect. How much are these going to rent per night and per week, per month, and what percentage of those are going to do that. But again, we can pull from past historical performance from the property for the past few years. Okay, here's what it's been doing, what they've been reporting. We can expect that at least that to continue, if not better, as we make improvements. And of course, we'll compare the market rents in the area to see where they're at and all that, just to increase those up. But typically for us, as part of that, again, part of it because it is so complicated, we try to simplify it by being extremely conservative on our underwriting. And I know everybody says they have conservative underwriting, which I don't know how much I believe that, as we're now seeing these days many properties that are not doing so well. But for us, I can honestly say that we are extremely conservative with our underwriting, in the fact that we don't even include some of those income streams that we know are going to be there. We just cut them off completely. Say we're not going to count on that at all. We don't inflate the rents to say, if it's say renting at like $30 a night, but market rents are $50 or $60 a night. We don't do our projections at that level. We'll either keep them the same as they are now, or maybe a slight increase from 30 to 35, like a very tiny increase, knowing that we most likely will still rent them at $50 a night or more. So things like that, we're very conservative on those projections for the income, but we also are very conservative with the expenses. So we'll overinflate the insurance, we'll overinflate the employee costs, because again, these properties do have staff. You're not just paying a property manager. You got to have a handful of staff to run the property. So all those things we take into account. And so after all that, if we end up with a number where we're at least hitting our target returns that we're looking for, then we know this is going to be a home run property, being that we know that we're going to just destroy those numbers that were under from our calculations, because we have so much more that's going to add to that. And so we're basically looking at, if in the worst case scenario, if this is going to hit our target returns, then great, this is going to be a fantastic property. That's what one we will go after. If it doesn't, that's one we'll cast to the side for now.
In speaking of that, you've mentioned that the returns are, you didn't want to invest in multifamily because the returns weren't what you really wanted to put out to your investors. So what are you sort of targeting for returns on these types of deals?
Yeah. And again, this is what initially attracted me to this space, because I was myself looking for higher returns. And so on an average property for us, what we target is we're looking at 12 to 15% average cash on cash. So that's like an annual cash flow returns. Not I've seen some people's I guess projections on their offering materials where their cash flows includes the equity at the end, that they're kind of backtracking. It's like, well, that's not true cash flow. You can't count that. So we're looking at actual cash on cash returns, your cash flows per year of 12 to 15% average. And then adding on the equity at the end, we're looking at about 2.5 to 3x multiples on a 5-year hold. So typically 18 to 25% IRR is the range. And so that's kind of what we're targeting. And honestly, for me, that's compared to what I've seen in other properties, that's like 2 or 3 times better than most other things I see. They're maybe a 4 to 6% average cash on cash and 2x multiples, right? So overall higher returns on the cash flows, higher return than equity multiples. And I can say that most likely higher returns for your depreciation as well. So it's kind of the great thing, the maybe hidden secret about these properties that even myself, I didn't quite understand or consider at the very beginning when I got into it. Because as I first got in, and people would ask me, as I talked to investors, they'd say, well, what kind of depreciation is there to expect? I'm like, well, I don't know. It's probably not much, but I didn't know. And then as I, talked to cost segregation experts, and they said, oh yeah, there's potentially huge depreciation. I'm all right. That's good to know. And then of course I learned later how and why, but I heard from some other people that in previous years had invested with some other campgrounds, not ours, but just other ones that are out there. And they said they got like 150% depreciation on one of their properties. I'm like, wow, that's good to know. And so I knew there's that expectation that we could potentially get over 100%. So I tell people, we'll probably be in the 70, 80% range, but there's potentially could be over 100. I can speak, from experience now, as we've closed out last year, we closed on 4 properties last year, and we did cost segregation studies in all of them. On one property in particular, we actually gave back to our investors on their K1s at 222% depreciation. So that's kind of almost unheard of. Could have that. What the heck? So yeah, for those that are looking for high depreciation, this is definitely a great asset class as well. If you don't care about cash flow, you don't care about depreciation. If you need depreciation, this is where you can get it as well. So that's one of those I guess the hidden gems of this space as well.
Yeah, how I mean, we don't have to get into a whole cost segregation discussion, but that's a little bit surprising to me because, in multifamily, they separate out the land. So I guess in my head, the bulk of what you would think of in a campground is land. And so I get now you've got all these other income streams and stuff, but it's just kind of that is, I would not have expected that. So that's actually fascinating. The higher cash flow makes sense. Like, but yeah, that's excellent. That's excellent news.
Yeah. And yeah, I'm not a cost segregation expert or CPA or financial advisor, so I couldn't really give you a full explanation of how that's possible. But I can definitely share. If those are interested, yeah, we can get on a call and I'll kind of work you through it how that's possible.
Yeah, very cool, very cool. Yeah, I mean, it's all super interesting. I think this will be great. I told you, I don't, we haven't really talked about this at any length anyway with anybody. I think I've talked to a few people that were maybe toying with the idea of getting into that space, but not doing it at the level that you are. Don, I want to switch gears and kind of get to the part where I get to ask you the questions I ask every guest. The first one is based on the name of the show being Know Your Why. So I always ask everyone, what is your why? What drives you? Kind of what's you're obviously had a lot of success already, but doesn't seem like you're intending to stop. So what keeps you going?
Yeah, well, I do intend to stop someday, but I still got a ways to go. But I think for me, and I assume for most people, the same thing is my why has changed over time, right? It evolved and as things in life happen and whatever. But um, what got me started with real estate initially, again, it was going back to overall, even now, I guess the overall the main thing is family. That's what the reason I do it all. And initially, when I first got started, again, it was I had the goal of one day to be able to have enough passive income to retire from my job so I could spend more time with my family. As things happened and went on, eventually it was also I wanted to have income to help take care of my mother as she was ill and not doing well and was going to need more professional care at some point. She's the reason we moved to Idaho in the first place. And then later it was as my kids started to grow, I'm like, wow, I got to pay for college and all these things. So all these like life events happened that I was like, I want to have the resources, the ability to have time freedom to be there and help people that are in need, and also have the resources to be able to do something about it. It's one thing, yeah, we got time to sit with my mom in the hospital, but I can't help pay her bills. I can't help pay for her care. Then what good is that going to do? Other than just being with her. But I want to be able to do both and to help take care of those I love. And now that I can say that because of that those steps I've taken, I have been able to leave my W-2 job at the end of 2022. So I'm full time in this now, so I have that time freedom to kind of do what I want. But not quite the level of the income where I want to be just yet to really do more and give more, because I'm big on giving and serving. That's our my wife and myself, our ultimate goal is to be able to do more at a bigger level to help more people. That's kind of our big why. Other than, of course, taking care of our family, it's just to being able to help others.
Yeah, that's fantastic. And I think that I love the point you just made about because I think a lot of people think there's two options. You can either have time for the things that like family or taking care of your mother or something, or you can have the money to pay for sort of that care and everything. That it's either or, and it's not true. I mean, it takes some work, and there's a lot of steps to get to the point where you can have both of those, but you can have both of those, and you're proof, and most of my guests are proof of that. You've got to take some steps. You've got to take control of your own sort of financial literacy and financial picture, but ultimately you can we can take care of our parents as they age and also spend time with them. Like it's just, you just got to kind of think about this as a work in progress that's going to take a little bit of time, but it's definitely reachable.
Right.
Tell us something about yourself that isn't common knowledge, special skill, hobby, anything you're comfortable sharing.
Well, I'm not sure how common it may be or may not be known, but I do speak Spanish fluently. In fact, I was just on a Spanish-speaking podcast last week. So
Oh, awesome.
it's yeah, it's something that you probably wouldn't guess from seeing or speaking with me. But yeah, actually, I served a mission for my church in Argentina from 1998 to 2000, and that's kind of where I really learned it and became fluent. My wife is from Paraguay, so we speak it at home still. And I actually started a Spanish translation business back in around 2000, 2001, somewhere there, to kind of do that as a side hobby project, but also a way to bring additional income. hoping that maybe I could create something more into that, have that be my full-time job, but didn't quite work out in that with that, but at least did provide some additional income and some help. But yeah, that's a skill that I have, is speaking and writing in Spanish. So yeah,
Awesome.
and then I guess aside from that, maybe my hobbies, I guess that I actually enjoy coin collecting. I have a large coin collection, and also like paper banknote collection as well. A huge part of that is Argentinian coins and currency, but also just world currency. I like collecting the world currency because they're a bit more colorful and exciting than the U.S. currency for the most part.
Yeah,
Yeah.
that is so true. I think we have about the most boring currency of anywhere I've ever seen.
Yeah.
Can't say I've traveled all over the world, but usually what I've seen, it just looks so much more exciting than ours. No, that's really, I'm sure, aside from, kind of being able to use it as a teaching tool, being fluent in Spanish, I think is probably tremendously helpful, kind of on the business side of things as well. So super cool. I didn't know that. I'm not sure who will, but thank you for sharing that. Don, when people hear this and they want to reach out to you, what's the best way?
I think we mentioned it early on. I'm very active on LinkedIn, so you can find me there pretty easily. You can also find me on Facebook as well. The other option is, of course, go to our website, beyondercamp.com, go to the holdings tab for our investment side of things, and then or the About Us tab as well. We'll kind of you'll find me, find my name. You can right there schedule a call with me for my calendar link that's on that site. That's the best way to probably get hold of me, or if you want to, just by email, don@beyondercamp.com.
Awesome. And all of that was right there behind you, but we will also place it in the show notes for people who are listening, but they should be able to find you. I know from personal experience, very active on LinkedIn, so should be able to find you there for sure. My last question for you, what's a piece of advice you would give to someone who wants to get started investing in real estate? And you can kind of take that in whatever direction you want, whether that's, specific to what you do or just overall in general. What would you tell someone that's kind of looking to follow in your footsteps?
Well, I would say my response would vary depending on who I'm talking to, like at what age, what experience. I'd say anybody that's young enough that wants to get started, or it not should be young, I guess, but if you don't have a large family to really need space for, do a house hack is probably the best and easiest way to get started. I've already ingrained that to all of my kids. When they're ready to buy a house, they're going to do a house hack. So it's the easiest way to get involved with buying a duplex, triplex, fourplex, and have your rent mortgage paid for you, so you can live for free, or at least close to free, and start building that wealth and income. That's definitely one thing I share with just about anybody that's just looking to get started at that point where they could do that. That wouldn't work for me, but by the time I learned about real estate, I had 4 kids, and it'd be hard to make that work. And my wife want to cram all the kids into one room. So but if you're starting at later age like myself, first of all, I just want to say maybe squash a couple myths, right? Like I'm proof that you don't need a lot of money to get started. I didn't have it. I had access to it. Again, I took a loan for my 401k, maybe a bit risky, but I was able to make it work. But there are ways to get started with little or low money without needing hundreds of thousands or millions to get started. So just connect with people that are doing it in this space, like myself and like Jason and others. Just kind of follow it and learn from others and what they've done and what they suggest. I mean, just listening to podcasts, and that was a big factor for me, just listening to hundreds of podcasts, is that I heard all these experiences from hundreds of people that had done different things, and I could pick up things that they've done and learn from their experience, and just all those things combined is what will add to your overall knowledge and help you decide what's best for you and what your path is.
Yeah, I completely agree. And I mean, the knowledge is out there. It's accessible. It's hard in this day and age of technology to say you didn't know, or I couldn't find out what I wanted to know. I mean, it's fairly accessible. As you said, there's like almost every real estate investor has a podcast. Like, there's so many of them. Everybody has a book. Like, you find the people that are doing what you want to do, or maybe even a couple people that have, if you're really in the beginning, you're not sure what you want to do, find a couple of people that just, you feel like you have alignment of values. You listen to them on a podcast and you're like, you know what, that person has, they have a family, they're strong family orientation, or they're strong a religious orientation, or whatever the case may be. They have some foundation in a cause. Like, find someone who you connect with and look at what they're doing. Because I think, a lot of us, as you get into it, you do start to look at it, as you mentioned, like, you really start to look at it as what's the bigger impact I can have. It's like, okay, I figured out how to take care of my family, the people that live in my house, and maybe our parents and that sort of thing. But like, now, you just start thinking bigger and outside of your own small bubble. I think that's when things get really interesting.
Yeah, sure.
Well, Don, this was awesome. Thank you so much for coming on the show today. Thank you for sharing everything. I know people are going to love this, and be, sort of reaching out to you to find out more.
Thanks, Jason, for the time, letting me come on. And yeah, my guess my goal here is just to help inspire somebody to hear something from this and feel like they can take some action and change their life as well.
Yeah, and I'm sure that it will. Folks listening, definitely listen to what he said, and please go ahead and like, rate, and review the podcast. It allows us to get more great guests on, like Don. That's how we kind of keep this thing going. So help as many people as possible. So everybody have a great day.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.